The exchange fund recorded an investment gain of $54.3 billion in the first quarter of the year, despite underwhelming performances of the local stock market. The Hong Kong Monetary Authority expects a high interest rate environment to persist for some time, and investment risks will remain. For the second consecutive quarter, the exchange fund recorded gains, an investment gain of $54.3 billion in the first quarter this year. Among the major components, investment income from other equities amounted to $36.3 billion. Bond investment gains reduced both year-on-year and quarter-on-quarter. Still, it raked in $25.1 billion. Hong Kong stock investment, however, lost $2.3 billion. $3.9 billion was disbursed to the fiscal reserves. Eddie Yu, chief executive of the Hong Kong Monetary Authority, said the investment outlook for the second quarter is hard to pinpoint. He said the authority will continue to adopt a defensive strategy to maintain the liquidity of the exchange fund, given the geopolitical tension in the Middle East and other factors.
The uncertainty about the U.S. interest rate path, which will depend on the path of inflation in the U.S., and whether the mainland economic growth will maintain a stable and growth pattern. I think that will affect mainly the Hong Kong and Chinese market, but also the global markets.
At a meeting of the Legislative Council's panel on financial affairs, lawmakers also called for better preparation from HKMA.
What should we do when we are faced with sustained periods of high interest rates? We should perform risk management.
Is there room to lower the rates? I'm afraid there is no room to do so for Hong Kong interest rates, because this would affect the capital flow. Policy-wise, is there anything we can do to support the local economy? Of course there is. We can support SMEs, we can take forward major projects.
Meanwhile, the number of negative equity cases in the first quarter hit a 20-year high with 32,000 cases, while the non-performing loan ratio has doubled from 0.03 to 0.06%. The Monetary Authority said that's due to the low base number in comparison, so the increase only involved around a dozen cases. And for this year's International Financial Leaders Investment Summit, which is slated for November 18th to 20th, Yu said leaders of 50 to 60 international financial institutions and banks have confirmed to attend.